Hi, this is RJ with RJ Loans, and today we're going to talk about full documentation loans. That's right, we want to talk about full doc. Okay, what does full documentation mean? Well, we're in an environment now where all loans in our real estate market, real estate lending market, now require all documentation on borrowers for qualifications. So what I'm going to do is I'm going to take a step-by-step approach of explaining what are the four categories that we must collect and know and exchange and educate and inform our borrowers regarding full doc loans. I like to use the acronym CCIP. And so CCIP stands for cash, credit, income, and property type. Now, when we talk about cash, we're going to just talk about the first C. The first C is cash, otherwise known as assets. And we're going to take everything as a full doc approach. And when we're talking about full documentation, what that means is we must show documented proof of the information and provide it to our loan officer. So under the first C of cash, we're talking about assets. We're talking about down payment money. Under the full doc guidelines, the standard documentation to show the source of funds would be 3 consecutive months or a quarterly statement on the borrower's banking services, such as checking, savings, asset account, money market, quarterly statement on any mutual fund accounts, a 401k quarterly statement. You must complete a 3 consecutive months documentation. The other item needs to be pointed out. You must have all pages of those asset statements included in the documentation. Now, some bank statements have front and back pages of the information. Some of the pages are numbered, but there's no information on them. Believe it or not, all lenders are required to have all pages. If you do not turn in that information, just expect the lender to ask for all pages of your bank statements. It's always good to provide all pages of 3 consecutive bank statements, or in lieu of that, you can get a quarterly statement. Now, I'm asked often about internet banking. Most of us are down to internet banking and don't receive monthly statements. Well, that's fine too. The form that the lender uses is called a VOD. A VOD stands for Verification of Deposits, and the lender will get a form signed by you to contact your bank to get a 90-day, 3-month average of all asset accounts. Now, a couple things you want to know about this. When we're verifying cash or assets, under a full doc loan program, if it is an FHA loan, I repeat, an FHA loan allows 100% of your down payment or your closing costs to be gift money. Now, what is gift money? Gift money can be money that is given to you from family, friends, or relatives. Gift money is 100% fine using an FHA loan. Now, under conforming conventional guidelines, they're a little different. Conforming conventional guidelines must require, depending on the loan program, a minimum of 3 to 5% of all money used to be your own resources of seasoned money. I'll repeat that. Most conventional programs require at least 3 to 5% of the down payment, 3 to 5% of all money being used to be your own source of funds. That means it must be sitting for a minimum of 3 consecutive months in your asset accounts. Now, how do we know this? Going back to the VOD. That verification of deposit will show an average 90-day balance of your bank accounts. And if you received a spike in any of those funds in the average balances over the last 3 months, you will be required to show documentation that that is your funds, not gift money, under both guidelines. So again, the rule of thumb is FHA loan says 100% can be given. Conventional loans requires a minimum of 3 or 5% to be your own funds, in addition to any other gift money. So, going back to the source of the C, cash can be used. Cash is called assets. Those assets could be down payment money, closing cost money for the loan purchase of a home. Under FHA guidelines, we can use 100% gift money. Your lender will provide you an FHA gift letter. And just to make a special note about gift money, if you're planning to use relative money, whatever you agree to exchange in terms of a loan agreement, whatever agreement you have with your relatives, all the lender requires is their gift letter filled out and acknowledged between both parties. A good point to make is you do not, I repeat, you do not need to exchange funds right away. Most lenders will allow you to fill out the gift letter, give it back to the loan officer. This is under an FHA loan, by the way. Get the gift letter back to the loan officer, and at time of closing, the gift money can be sent to the escrow company, and then the exchange of money can take place directly with the escrow company. I'll repeat that. If you're using gift money on an FHA loan, which is 100% fine, that gift money can be exchanged at the close of escrow. The gift letter will be required for the submission of the loan. So let's take a recap. Cash. Cash is an asset. Under FHA guidelines, they allow 100% money to come from gift. There's a gift letter that needs to be executed. Your loan officer will hand it to you. You do not need to exchange funds with the gift letter until the close of escrow. Now, conventional loans. Most conventional loans require the borrower to have 3 to 5% of their own money without gift money. The first 3 to 5% that's being used for the purchase must be the borrower's own funds. All banks require, all lenders require, 3 consecutive months of bank statements. If you have internet banking, a VOD will be used. You can do a printout of your internet banking statements, and that's fine. Quarterly statements are fine. Mutual funds, 401ks, asset accounts, checking account, savings account. All these accounts must provide 3 consecutive months of bank statements. That is our recap today, and that is the beginning of our first letter of C. The next video will talk about the other C, which talks about credit.